to take losses, like all joking aside, you have to take losses to win in the long term. And I know this might seem like some kind of BS cliche that Gap would throw on a t-shirt, but you have to lose so that you can win. It's a part of, I mean, maybe you could give some background. I know you talked with Pete about this earlier in the week, but what was your trade defense, your mechanics in terms of options trading when you were, doing it big professionally in the options world? Were you taking losses? And if so, how frequently were you like, all right, this was a bad trade, I'm done with it, move on? Because I know a lot of options traders are more of the stubborn defensive types, and they'll defend something for years until it comes back. So is taking losses new to you with futures, or is it something you're used to with options?
Yeah, definitely used to it with options. I mean, I think the idea that you lose every now and again is part of the game, right? And so, it depends. It depends on the trade in certain situations. A lot of times, let's take it from the example of working at a trading firm and you're long vol, and you're trading a chart, often you're trading a volatility chart, right? Like you're looking at situations where you feel that implied volatility is going to bounce back and, in a big way, if you're getting long something, long the volatility from that standpoint. And sometimes it doesn't. And sometimes you're just, especially if you're long, you're bleeding out money, if you will. And again, we're talking about literally volatility in that you're long, an option and you have a stock position against it in some type of way. And so, yeah, you're set up to win, so to speak, but it's just not happening in your favor. And, those are situations you have to deal with. Or, again, sticking with a firm, you're short, some options and you have some stock against it. Or even if you're just short a strangle, short a straddle, and, volatility continues to increase. Those are situations where you come in every day and it's not exactly going your way. How do you handle that, right? And to your point, a lot of people will defend something for a very long time before they have to give it up. I mean, I remember seeing a guy defending his whole book that was losing for a while. And he was like, he didn't want any of the positions to take it off. And his manager started closing some one day when the guy was out. It actually led to a pretty interesting and hilarious type story because it was just kind of this fighting. I shouldn't even be telling the story, but dude was really like upset. We remember hearing, the whole desk ended up hearing about it. He was upset that his positions were being closed. He was short vol and vol was just kind of, exploding on him a little bit across his book. And his manager started closing it out one day when he was out, and the guy was mad about it. And I think the guy ended up like quitting that group or something like that. And so, that happens.
That's such a great example, though, because like that, whether you're a professional who's got a huge book and like you say, has multiple positions winning and losing literally on a second by second basis, and you're closing stuff out via algorithms and everything else, all the way down to the smallest trader who puts on 1 or 2 trades per week or per month, whatever it is, what you just talked about can absolutely not happen, which is getting emotional, getting stubborn, getting stuck to these positions literally until whether it's a risk manager at a prop shop or something like that, or your brokerage coming to you saying, hey, you need to put more money in this account because you are too stubborn with this losing position, and now it's eaten up a bunch of your money, and we're calling you for more margin here. That is not what you can do, especially in the futures world. Even though we have small futures here from the small exchange, and rarely do things get out of hand that people would get, margin called or anything like that. But still, you just can't have that idea, Jermal, because once you get stuck to those positions, they take over everything. Like that guy, while he's, pushing back against the short vol position and volatility is going against him. In the meantime, he probably did nothing new. Like he wasn't able to, as that position's going against him, scalp around it, make some money, from Monday to Friday. He's not able to do anything on Tuesday, Wednesday, and Thursday. And that's killer. And that's why, I bring up this formula, and it's not a formula you necessarily need to write down or memorize, but it's more of a concept. And it's essential to futures. It's really essential to options and everything, but especially futures, a quicker game, Jermal, that you have to be even less emotional about than your options. And it's the idea of taking losses, hopefully at a lower rate. If you're taking losses more often than your winners, then you got to change something up there just structurally. But if your losses are rolling in less frequently than your winners are, all you have to do, Jermal, and it seems so simple, but it's hard for people to get over, all you have to do is make sure that your losses and profits are at least equal. Like if you've got a strategy that is north of 50%, just make sure that your losses aren't exceeding your profits every time you employ that strategy, and that will bring you to long-term success. It's really as simple as that, but it does get so difficult when people put emotions into it.
So basically you're saying here this, and this, I've actually never seen it put out this way. This is really interesting what you got here, Frank, but like basically you're saying the idea of something trading for scratch basically is what you're kind of getting at. Yeah. I mean, that makes sense. Totally makes sense. But this is a cool thing. I've never seen it put out this way, but you got some interesting ways of putting it out. This is dope.
Yeah. This is a little bit every once in a while, I get back into like the classes I took at university with like math theory. And it's like this, times this greater equal to this only if assumption. But basically like, and everybody knows this in the back of their head. You don't need to be a mathematician or anything to understand this. Like if I have a 50% success rate and every time I employ that strategy, I make or lose $100, then I scratch everything, right? Like that's how it works. But the name of the game, why options traders are so quick to sell puts is because historically there's significant edge in selling those puts especially into down moves. And so when you see that edge, it's the same in futures. Like we talk about all the time, one of the most basic ones is like the stock market bounce. Like if stock index futures are down huge on a Monday, there's like a 65% chance historically that they're up on that Tuesday. And so in futures, it's a matter of finding those, greater than 50% strategies, Jermal. And if you can make those profits and losses just equal to each other, you're north of zero, depending on how many times you employed that strategy and what those averages were at the end of the month or the year, whatever time frame. It's really as simple as that. And I want to close in on a really good example of this. A market that is a good example of this year in and year out is crude oil. It's a market that has a ton of opportunity, but one that gets out of hand extremely quickly. And you see here, if I sold into the crude oil move early this year, Jermal, and I sold those 55s, which looked ridiculous at the time, this was a market that traded negative last year and was trading around $20, $30 a barrel, got all the way up to 55. Man, that looks expensive to me. I'm selling. If you sold there and you had no mechanics for taking losses, dude, that market never came back to scratch. That market took off and you're out right now, $1,800. You need to have some defense because this is a type of trade where you get the tap on the shoulder from the risk manager or from, God forbid, your broker saying, hey, dude, this one we're going to have to close out for you. And that's not what you want.
No, that's not what you want at all. And you're right. I mean, oil is one of those names, again, this is one of the reasons why the commodities are, commodities can be somewhat volatile, right? And so this is, oil is definitely one of those because year in and year out, you have different levels, you have different OPEC meetings, whatever it may be that, factors that push oil higher. And in the case of this year, of course, people have been returning to the roads, as they say. And so everybody's been driving around. Oil consumption is up, therefore gas consumption is up. And so It's been interesting, but you're right. The interesting thing about this chart is there is plenty of opportunity in there, right? And so that's the thing. You have to look for those opportunistic levels, and sometimes you may be wrong. I mean, this must have been in late May or early. No, wait. When did we start this contract?
The SMO contract?
Yeah, SMO.
That would have been May. That would have been May.
Yeah. So I think it was maybe 2 weeks after the contract started, I initiated my first position. I was short and it was like 72 in the orders or something like that. And it went against me, and I held on to it. It came back down. I was looking for it to come back through my level. I think we talked about this, but it eventually, I eventually felt lost on it. I didn't know exactly what I was expecting it to do anymore. And I at one point in time, I eventually cut it for like $150 loss. And that it is what it is. I had to do that. I'll reestablish at some point where I think it's more beneficial, but that's kind of one of those things. And it's taken me years to get to that. Again, I'm new to trading futures, but I'm not new to losses, right? And so it is something you have to learn how to manage losses. You have to learn how, taking a loss at one point in time can eventually lead to a situation where you do make a win on it. But it's not easy. It's a difficult concept.
Absolutely. And I'm glad that you brought up that example there, because it's like, it is one of those, it's like anything in your life, like anything that you're freaked out about. And the minute that you do it for the first time, it's like, oh, that wasn't that big of a deal. And then if you start to work it into your daily life, it's like, oh, this really isn't a big deal. And I am now kind of like doing this almost subconsciously. Taking losses is exactly that type of thing. It's something that a lot of people they work up in their mind like, oh man, like that's scary. Like I'm going to actually like realize this loss. Like this thing has been going against me. It's against me for $200, $300. Like it doesn't feel good to take that loss, but the more often that you work it into your mechanics, and like you say, and I love this about small exchange futures and a lot of people in our trading community here with small exchange products, it's always around like $100, right? Which is like on a contract by contract basis, very low stakes, but this one contract can work up to almost $2,000 in losses. What really would have been better, and this is a lot of stuff here. We'll work through this here in a second. But say you wanted to, your strategy was selling into up moves in crude oil. You have a market here in crude oil that is literally up almost 100% on the year. So most people would say to you, selling crude oil in 2021, there's no way you could eke out a scratch. There's no way you could eke out profits or anything else. Well, here is several trades all selling crude oil that you take losses and profits, and you would have netted out to a scratch. We start out in about February here. I sell those 55s. Well, if I cover for a loss at 56, that's a $100 loser. All right, darn, I'm down $100 to start the year. But like you alluded to, Jermal, there's opportunities to sell where the market actually came lower. And what's great is I sold the 55s. I cover at 56 for a $100 loss. They shot right up to 62, man. Now I didn't see the losses between 56 and 62, and I'm flat. I can get right back in, and you see quickly the market moves back down to 61. Now I'm at scratch on the year, even for a crude oil market that at that point is up more than $10. And you do that throughout this process, and it brings, like, every market, every strategy isn't going to bring you a boatload of profits every single year. That's just, everybody knows that. Even from the options side, there's going to be positions that it's like, wow, Netflix was bad to me this year, but Amazon was really good to me. Same thing here. Like, so far in 2021, selling crude oil has not worked. But if you took losses and you were able to get in on some of those points where it did work, you could at least be at a scratch. You could have worked out a profitable scenario here. I don't want to get ahead of ourselves. It'd be very tough. But as long as you're being mechanical with those losses and wins, you can take a losing strategy and bring it at least back to scratch or back to something that is sustainable. Because selling once, taking $1,800 in losses, Jermal, and then going into a market like gold, selling that and taking $100 in profits, that portfolio, that doesn't match up. That equation doesn't work, does it?
No, it doesn't work at all. I mean, very different things, very different, factors that are affecting those two markets. But I think it's cool you have laid out here, because in this situation, I mean, mechanically, this is somebody who's saying, if I'm getting beat on a dollar move to the upside, it's time to close. Yeah. And those are the hard things to do. Those are the tough ones, right? Because next thing you know, the next day or whatever, it doesn't happen on this chart. But the fear is, for most people, you cover at 56 and then the next day or two, it comes down. And not only that, it's below, not only is it below 55, it's at 54. And you're like, dang it, I knew it was going to happen. And now I'm so angry. And now and that's the thing. A lot of people are like, I originally got shorted at 55 because I thought it was going to go to 53. It's still at 54. I still have a chance. So now I'm going to sell at 54, and then boom, it bounces back up. Right. But that's what I just described was emotional. And so that's the whole thing. You want to continue to stay mechanical. And again, this is something, it was really one of my first times doing it with this small crude oil future, but it's the concept, right? Like the concept is something that I've had to learn via options. And, it's interesting to know that there is the same concept with futures. I mean, I kind of knew there was, but still there's one thing knowing something and actually practicing it. It's not easy, right? I mean, it's not easy at all.
It isn't, but I can guarantee that once you work this into your, trading habits, it is extremely relieving. Like to me, it's very similar to, cryptocurrencies starting to take off a couple of years ago, and I knew nothing about it. Like I had read about blockchain and all this other stuff, had not a dollar invested. I actually just yesterday for the first time put some money into an investment in cryptocurrencies, but there's this feeling, Jermal, and I'm sure you have it, every human has this, where it's like, man, I miss this. And all these people are making money, and that makes me angry. And it's like the minute that you can get past that and be like, I'm going to stick to my strategies with options on Netflix and Amazon, or futures trades on crude oil and gold and everything else. Get rid of all of that. Like, oh, I'm missing out on this thing. And like you say, like, ooh, I sold at 55, it's at 56. If I cover here and it moves back down to 50, though, I really missed it. What you'll find is the more often you do this, you will get rid of that feeling. It'll be so much more relieving. It's as it is in trading, it is in life. Just like, don't compare yourself to other people. Don't compare your trades to what could have been a great trade. Just say to yourself, hey, this is what I'm looking to make or profit on this futures trade from the jump. When I see that loss, I'm out. When I see that profit, I'm out. And when I'm out, I'm on to the next thing, and I'm not thinking about it. I'm not looking at it. I'm not worrying about it. And that's how you win, by taking losses, my friend. It's going to help your portfolio. It's going to help your peace of mind as well.
Yeah, that's right. I mean, you're right. You can't sit around and think about the has-beens or the would-haves. You have to trade what's in front of you. And that's the one thing about our market. We get plenty of opportunities and a lot of different things. Sure, there are some once-in-a-lifetime opportunities. That does happen every now and again, but not every opportunity is that. There's plenty of opportunities that you just have to wait till it's right for you, right?
Yeah, that's exactly that. And that is like the great thing about the Tasty Trade Nation and everyone else is a lot of people would be like, oh man, like these guys are making, 10, 20, 30% annually selling options. But if they just bought Bitcoin, they would have made, 1,000%. And it's like, yeah, dude, sick. But like, I have my own thing, and there's an opportunity every single day because I can jump from options on this to futures on that, and there are different opportunities. Now, if your idea was buy Bitcoin, what's the idea now? Like it is so empowering to be like, don't worry about what other people are doing. You just be thankful that you have options and futures and all these different tools on so many different markets every day, a new opportunity arising. Stocks are boring. Well, metals are moving. Metals are boring. Interest rates are jumping off the page. There's always something to do here. Jermal, thanks so much for joining me here on The Leap. We always have a blast here on Thursday afternoons. Everybody stick around. We got Splash and Futures coming up next. And I'm excited to see next week what T-shirts that your wife has in store for us, Jermal.
Thanks. Hey, we'll see what we can do. We aim to please, my friend.
Thanks so much, everybody. Peace.